Yeah, so quick commodity update today. Sam is out. He is getting a Peloton with Sam is like the ultimate white girl. At the end of the day,
Yeah.
if we really like dissect Sam's psychology, he's actually internally a white girl. Um, he talks about the white girl food, he talks about like white girl baking, like I mean, he's like the epitome of the ultimate white girl. That's why we love Sam. Kevin is still out for another week or so. So we'll be with you. I don't know if he can go on live just yet or not. So we'll be with you guys with a recorded version for Kevin after market hours at some point. But yeah, just looking at the market, man. Everybody's like, "Oh my gosh, it's a stock market crash." It's the end of the world. Let's look at the SPY. Is it down like 50% yet? Oh no, it's only down a couple. Damn. Um, this is why I'm always looking at big picture charts, Rick, and this is something that I think a lot of people just don't do. It's like, and Rick, we were just talking off mic a little bit, and I said we talk about this on live, in a second, which is this market environment right here. This was especially this portion. Basically, you're looking at that late 2020 through 2021.
After the breakout.
Yes, after
After the
the
breakout.
election. Yeah.
Yeah.
So after the election happened, then the breakout happens. We get past those old highs, and there's all these people that came out of the woodwork. There and not to mention, there was a lot of traders who just came into trading because they were like, "Oh man, the market is down a lot. I should start buying this thing." And they all became the luckiest people on earth because sometimes market corrections last a very long time. This one in 2020 did not. The Fed came in, did unlimited QE, did helicopter money literally to every single man, woman, and child. Then, basically PPP loans to every person who didn't probably need a PPP loan. And the market just kind of bottomed out and continued higher. So they got very lucky. And then there was names of people. I was just telling Rick about this. Some names that people who were out there, like their Twitter names were like no pullbacks. Market straight up, always bullish. Like it's just this is something that really does happen, and it's a function of the market environment that you're in at times. And so
Yeah.
if you're looking at this period, yeah, you're going to see people like that. Not to mention the meme stock phase.
Of
I'm
course.
sure you remember that phase, Rick.
Of
Like
course.
the
I mean,
GameStop.
sentiment.
Go
Yeah.
ahead.
I was going to say, I mean, sentiment back then was something else. It's something truly for the history books. I want to say late 20, early 21, really up until like June, July of 21. And then obviously market tops in December, November of 21. Then it was just energy that kept going. But sentiment truly was overextended. I mean, in every sense of that word. And then obviously you got that extreme overcorrection in 22 where every single analyst was bearish going into 23. So it's funny how people do that, right? It's funny how nature does that. You
Yeah,
go all the way onto one extreme and then you overcorrect. Oh my God, no, these stocks are the most expensive they've ever been. The market will not go up in 2023. Consensus for the first time ever on Wall Street was market's going to go down in 23. It's fascinating, truly. I mean, if you have some sort of a behavioral framework to understand this game, really helps out when you're dealing with all this noise.
I
Right?
love human
Everything's,
nature for
yeah,
that fact of what you just said. Human nature, let's talk about that a little bit because it's Rick is laying down some knowledge here, and this is something for everybody to think about, which is, when humans think this is going up, this is never going to stop. I'm doing great. I'm the best trader ever. Like people always point to the 2021 year we had, and I'm like, yeah, it was great as a commodities trader being long all the commodities, and then stocks are just all moving up at the same time. Yeah, of course I killed it. It's the environments like this where you get to see what type of trader you really are. Are you someone who can actually handle this type of an environment? That's where it's rare.
yeah.
How do you
Show me who you really are.
yeah,
Show me who you really
if you have a
are. Right?
positive return or even a flat return during 2022, I'm like, yeah, you were a good trader. Um, if you have a great return, whether it's 5 billion% or 20% in 2021, nobody really cares. It's just something that should have happened considering the market was extremely low volatility and just moving up and to the right. So going forward, Rick, like you mentioned, that breakout that happened in the Nasdaq basically was the one. It was dead. Everybody hated it. So let's go back to the Qs because this is great, and I love that Rick brought this up. So if we go to the Qs, we take a look at that. That's actually my buy signal from that day, still on there. I was illustrating that like a few weeks ago for everybody in our channel. So basically, you get a 100-day buy signal was here, and at this point, everybody was like, "Okay, the Nasdaq's dead. It's 2022. We were heading into the worst recession ever at that point. It was the end of the world."
Not only that,
Analysts
you
are
were
all bearish.
stupid. Not only that, you were stupid to buy tech stocks at that time. I mean, I
Yep.
remember going on TV, Meta was trading at $80, right? I mean, I'm exaggerating. Maybe it was 85, 90, right? But Meta did get down to those levels. And I still remember it vividly, right? Josh Brown was on TV saying, "Oh, I had a, buy stop for Meta. It got filled at 90. I didn't expect the stock ever to trade at these multiples, blah, blah, blah." And that was sort of what sentiment was at the time you got the trade signal. It was, I mean, it wasn't quite the exact bottom, but I mean, it was damn near close to the bottom.
Yeah, and the Nasdaq was down 36% on that pullback. And some of those stocks that Rick's talking about here, they were down quite a bit more. You're talking like, 50, 60, 70% for some
Oh
of these
yeah.
big
Oh
names.
yeah. Yeah.
So, at that point, everybody said the tech bubble is over, it's burst, it's the end of the world. Basically, you're an idiot for ever buying tech again. You get this 100-day buy signal, and then do you remember what happens, Rick?
Yeah.
So the bank stocks all like start to collapse, and everybody's like, "Yep, see, banking
SVB,
crisis."
Silvergate,
Yep.
First Republic.
Let's see. KRE is a good one to illustrate this. Yeah, look at that. Look at that nasty thing.
It hit financials pretty hard. It wasn't just isolated to the regionals.
Yeah, it hit this. So the regionals got hit the worst. So this is that crisis right here. The regionals got hit the worst, and that's the big downtrend right there. Let's get you guys a watermark so you guys can see what it is. So that's the KRE index. And if we look at XLF, it was hit, but not hit nearly as bad. So we kind of get this pullback. Wait, sorry, I'm in the wrong area. It's this one here. So we get this pullback back to kind of support, and then financials were basically dead. But the whole time, technology was showing you relative strength. And so the whole time, technology, even though, yes, we see this little pullback here, and yes, it looks nasty, and you can make a million reasons why you wouldn't want to buy it. However, it never pulled back to a point where like it was anywhere near a stop or an exit signal. So then we got long the Nasdaq, and everybody thought I was an idiot. I remember people like writing me upset about this, like, "Dude, technology is going to fall 50%." And I'd be like, "Yeah, I have a buy signal, but it's going to fall 50%." I'd be like, "Well, my stop loss will hit at some point, so it doesn't matter." And people were like bent out of shape about it. And the one that everybody hated the most at that time, which is the semiconductors. So,
oh yeah.
this was the most hated at that time. Nobody thought semiconductor, because that's a thing. Everybody today, they talk about NVIDIA or all these things, and they're like, "I wish I would have got in it," or "I knew that was going to go like that." And like, nobody knew NVIDIA was going to make a huge move. Let's be honest. Like, nobody knew that move was coming. Sure, you could say,
drawdown. It was a
yeah,
pretty big drawdown.
a huge drawdown. Let's actually look at NVIDIA because that's could be interesting.
It's like over 60%, if I'm not mistaken.
So let's look at NVIDIA because that's one of the ones I was talking about that had the huge drawdown. Wow, I look very bearish. Oh, that was a chart I posted for you, Rick. Actually, I think I made a joke to you one time saying like the bears are going to say this or somebody.
Yeah,
I made
here's my target for NVIDIA.
Yeah, here's my target. That's my target. But that's what people do. They make those charts and they're like, yeah, okay, the last time NVIDIA had a drawdown, it was here. There's where support is. There's no support anywhere except for in that zone. So therefore, Nvidia from its highs are gonna fall all the way. That's probably just like the first fib or some shit that they're gonna say, or the Elliott wave is probably gonna hit there, and then the second wave is gonna hit there, and it's gonna go down 90%. And that's the
Yeah.
things like people say to scare people, because really it's like people will tell me all the time, like, you're hurting people by telling them to be in a trend that's all the way up here. And I always say, like, no, what hurts people more than anything is to bet against a trend. Like, betting against a trend costs you a lot of money, whether it's a downtrend or an uptrend. So, NVIDIA, nobody at this time knew NVIDIA after its 70% drawdown was going to move like this. And then NVIDIA basically makes a huge trend higher. So we're looking at NVIDIA here, and nobody wants it. Everybody's telling me how stupid I am for actually ever trying to buy this thing. And then the buy signal was here. And once again, we got that pullback right after the buy signal comes in. Then we see NVIDIA go up 687%. And what I said earlier was that nobody would have ever thought NVIDIA, like, once again, in hindsight, anybody could say AI, they could
I
say
was
this.
telling everyone to buy it.
Yeah, right. I was telling everybody to buy it right
Come on,
here.
bro.
Actually, sorry, Rick. I was telling everybody to buy it right here. So I was
playing around.
Yeah. But no, that's what people say. They always are like, I was telling everybody to buy it there, and I knew the AI thing. Like, yeah, you could know things, sure, you can feel things, but like the conviction behind it to put on the trade, hold it for that long, that's really hard to do. So like, nobody knew NVIDIA was going to end up there. The only way you catch these type of trends is to really ride a trend model. You're a technical trader. There was no pullbacks that hit any sort of a sell signal, whether it was a stop. Yep, there you go. Whether it was a stop loss, whether it was a exit signal, there was no exit signals for this thing. There still really isn't. This thing has just kind of continued higher all these years later. So once again, when everybody's kind of telling you something is stupid, sometimes it's not. And that's something to really think about as a trader, because really what you do as a trader is, it's not that you always bet on trends or always do this or always do that. It's understanding your system, your strategy. And if your system and strategy is telling you to be long NVIDIA, I don't care who tells you that it's a bad idea. I don't care if I tell you it's a bad idea. I would never do that. I really stay away from ever telling anybody anything's a bad idea, because I know I don't know the future. So, if your buy signal is telling you that, and it's in an uptrend, continue to hold that thing and don't care about what anybody else is saying. I think that's important. So back to the NASDAQ and sentiment. So today, everybody's very bearish on the NASDAQ. And for me, I think the technology will underperform, even though I'm still long the Qs. And I'll give you the reason that I'm long the Qs still. This is the pullback. This is where we're at today, where everybody's going, it's the end of technology. This is it. You see the dollar, all these things, this is the pullback. What are we, 4% from highs? 4% from all-time highs, I think, at least closing. I'm looking at a line chart. So we're only 4% from all-time highs. So this whole thing has been an uptrend. We have pulled back much bigger than that and continued this uptrend again and again. I don't see any reason why it couldn't go higher. Once again, I think there's better areas to be, but that doesn't mean anything about what I feel. That's not what I'm going to trade on. So let's look at some other things, Rick, because we're here for commodities. Everybody's kind of sitting here wondering when we're going to talk about commodities. I'm sure this is the biggest audience we've ever had. It's probably like they want to see Rick today. It's probably millions of people here to hear about commodities. I know everybody is always wants to hear about commodities. That's why I always pick the most popular topics, which is commodities. I'm just kidding, guys. But so looking here, natural gas. This is one that's been a hell of a trade. And I think too many people out here, like, they think that natural gas is hard to trade. They hear about the Widowmaker thing, and so on. Natural gas is just the most uncorrelated asset you will ever trade. And I think that's the most important thing of what we're looking at here. Natural gas is moving higher. We have a situation down here where we started to see extreme commercial buying. meaning positioning gets lopsided. So as we get a buy signal here, this is in our reversal model. We've been holding this trade for a long time. This return's been pretty crazy, but once again, then we get some breakouts. This was the first breakout. Now we're breaking out of these old highs. Natural gas doesn't get over $4 a lot. Like it's been a while since it's been over $4, basically since 2023, 2022, really. So I think this is something for people to continue to keep an eye on. And I just wanted to bring this chart up because a lot of people keep asking about natural gas, and I'm still bullish on natural gas. I have no reasons to not be. Rick, do you have anything in the NG sector?
I mean, chart looks like a smile, not like a frown. I've talked
That's the
about
most important thing.
The best pure play in the equity space is Comstock Resources, ticker CRK. I did not bring a chart, but I've shared that chart.
I got you.
Over and over and over again. And it's the one that tracks natty gas the closest out of all the equity instruments, even better than something like UNG or UNL. And that base just looks pretty amazing to me.
Yeah.
Pretty amazing, man. I mean, if you go, yeah, I mean, you're all zoomed out. I was gonna say, oh, can you zoom out? But you already did it. So
yeah, looking at
nice
that huge base that
Nice
you're
base.
talking about, and I know you've been talking about this one for a while. Rick came on with Rick's picks not too long ago, and was talking about Comstock. Now, once again, this thing is ready to take off. Natural gas is also moving under the surface. It's only going to give a boost to this stock. So I definitely like this one as something to take a play on natural gas outside of buying the actual futures. If you guys are trading futures, great. I don't suggest people trade UNG unless it's very short term. The roll cost for rolling natural gas is high. And so as you roll into the next contract, as you continue to do that moving forward, you're basically paying that roll cost by hanging on to that ETF, which is why the ETF looks like dog shit most of the time. And just being very honest, it does. It looks terrible.
Even the UNL, which is the 12-month, looks just as bad.
Yes. So let's look at, I'm going to zoom out and look at NG just so people get this quick lesson. So here's NG zoomed out. Obviously, we're back into that uptrend. This is that huge move from 2020 through 2022. And now let's look at UNG. Straight dog shit. I mean, I don't know how else to say that in a nicer way for everybody, but it just looks like trash. Granted, you could take these moves, these short-term moves, these short-term pops, you'll make some money. But as long as the market you're paying on your rolls, you're going to see this thing continue to be in a downtrend relative to natural gas. It's the only way to do it. That's why things like GLD track gold very well, because it's a spot index. So GLD track, I never look at this thing. I don't even know what that line's from anymore. But GLD is a spot gold index, and it really tracks gold very well because it's the physical gold market. And then if you take a look at XAU USD, now you're seeing the difference. So there's not much of a difference. Like there's a little difference, but there's not much of a difference. And that's what you want to see when you're looking at an ETF. And yeah, looking at this long term, gold's another one we should talk about real fast. I brought some slides which we can go through in a sec, but gold just continues to blast off.
Looks very nice. Very nice. And what's also awesome is that silver, it doesn't look that bad either.
Yes. I was just talking about that today. I was getting some pushback on this one, and I like that because I like to hear that people are going, I don't know about silver. That's my favorite. I really get
when
excited.
Silver goes, it doesn't look back.
Yes.
It does not look back.
So the one thing I keep highlighting is like, here's the one from 2020. And you might say, Jason, why did you draw that line so low? If we're looking at candles, it hits the bottom of the candlestick. So the entire move was 154% at 4 months and 3 weeks. So that's a huge move very quickly in a commodity. And once again, when silver moves, this thing really moves. And so we're still in this uptrend. Like gold, silver doesn't look bad. A lot of people keep acting like it's massively underperforming, but it really doesn't look that bad. So I do think that silver is probably going to catch up at some point, and I think that this year is when it's going to happen. I'd be surprised if it doesn't. You want to talk about some? You're on.
I mean, shorter term, silver looks even better, honestly. If you zoom in, trying to look for a chart because I really want to share this with people. It is a chart of the silver gold ratio. Actually,
Oh,
yes,
I
found
got it. Don't worry.
You got it.
Don't worry.
Got it.
I
Actually,
brought
let
it
me.
today.
I brought a. Listen, it should be.
Oh, look,
I'm
I didn't
adding
even
it.
put it in the deck.
I just added it. I
Is
just
it
added
12?
it. It's 13.
13. Okay. I
So
got you. Let me go to full screen. One sec.
So this cycle, this level in the silver gold ratio has been a fantastic accumulation zone for both metals because obviously, well, not obviously, but when silver's performing well, gold's also performing well, right? And typically in the precious metals bull run, you want silver to be outperforming gold, right, Jason?
Yes.
So this level, and this is where the art in the art and science of technical analysis comes in. It's not an exact level, but this zone in the silver gold ratio has just been a fantastic accumulation zone for both metals. Every time silver gold reaches that little band, you tend to go a lot higher from there. So that's what I've been looking at for silver gold.
No, this is even better than my chart. So, I actually brought one of these, but it's funny, this is very similar, and it's just highlighting this level over and over again. And you could go back, and my chart just highlights it going back to 2000. So
Oh
basically
wow.
what
Okay.
we're looking at here is the same level causes pops. And not to mention, if you even don't look at the level, look at just basically silver starting to be at a zone where it's going to outperform. When silver outperforms, it does every single time and makes these huge moves. Rick's highlighted them here very well, and this is in the short term. So short-term swing traders, like you can make some money right here, right now, with a nice move in silver moving
I
higher.
have some silver calls.
Yeah, and
SLV, not silver, but
that's how I think
same.
that's how I think people should be playing it. I think you should play it like that. I think too many people are trying to play it so
Yeah.
many different ways. They hate silver, they want to do it this.
I
It's
mean,
like,
if
no, go buy, take 1 or
you could,
2% of your portfolio, buy some call options 6 months out and go sit on your hands for a while.
yeah,
And this thing can take off. And
yeah,
worst case scenario, your risk isn't that much, so you wouldn't lose much money, but your upside could be 10, 20x pretty easily.
yeah.
30x also could happen. So silver call options are something I like quite a bit right now. So let's run through
Especially if
this. Go
you
ahead,
read
Rick.
my mind. I was gonna say you read my mind. I was gonna say, especially if the dollar rolls over.
Yes, and it looks like it is. And I didn't get to organize these slides, and I actually had an order I wanted to do, and I completely forgot about it. But
It's fine.
anyways, busy day, guys. Busy day. Lots of writing. If you guys check out the Substack, there's stuff on there every single day. Always posting our trades, our ideas, what the fund's doing, and so on. So if you guys want an actual look at that, filled with fun stories and teaching moments, and basically different trading strategies and systems, go over there, check it out. It's Against All Odds Research on Substack. So looking at the dollar index here, we're just kind of looking at this rolling over. And if you remember right, this was something that I highlighted, and then I'm going to go out of order. Sorry, guys, but it's just what's going to have to do right there. So I highlighted this a while ago, and this was basically Trump's inauguration and the rollover after the inauguration. And I talked about the election and seeing, we'd most likely see a dollar bump after the election. It's very normal. It happens quite a bit. But after that bump after the election, we start to see that rollover. And that happens in January usually. So now this thing's rolling over and moving lower. and that's in 2017. Now, people would say, Jason, you're crazy. Donald Trump's in office. The dollar's going to be strong. America first, blah, blah, blah. America first doesn't mean the dollar needs to be strong. Companies in the United States actually do better with a lower dollar. Small business. What companies outsource out over to China and all these other areas or have factories in those areas? Well, that's large cap companies usually. Small cap companies are usually very US based, buying products outside of the US. And this turns into a lot hard. It's a worse environment for them if the dollar is strong. So I don't think it's within Donald Trump's interest. I don't think it's within the global interest. I don't think it's within anybody's interest to have a strong dollar. I don't think it makes sense for anybody. So I do think the dollar is most likely going to go down here. Sorry, I got to roll all the way back. But I do think the dollar is really rolling over here. I've been pointing to the positioning. The positioning got extremely lopsided. Now it's going lower. We're long some currencies against the dollar at the moment. But most likely, more than anything, I think the thing that's going to benefit the most is silver. Like silver is going to be it.
I was going to say also, I mean, you can look at something like the staples are probably just front running the breakdown in the dollar. I mean, you look at staples over the past 2 weeks. My God, I mean, does
Yeah.
that not
So
look like a front run to
XLP,
you?
for you guys who don't know the ticker, so XLP is consumer staples. Take a look at that. That's also showing, that we're kind of in this weak dollar environment. It's getting very interesting. And another thing that's continuing to show the weak dollar environment could be happening, which is what happened in because and why I say that I'll illustrate that right now, which is .com bust happens. Then basically commodities take a run. What also rolled over in 2000? The dollar. The dollar rolled straight over. Money started flowing into Latin America, China, and so on, and commodities. So, and also out of US bonds. And so basically, I think the reason why nobody wants to believe that this rotation out of dollars and out of United States technology stocks could happen is that we've been in that environment for so long. Look at, basically since 2008, this has been a huge downtrend. So commodities have been underperforming bonds, commodities have been underperforming stocks. Technology has led the way this entire cycle, basically. But then we get to 2020 and the COVID crash happens, and then inflation comes back. And so what I keep saying is this inflationary environment is pointing to the fact that bonds should be weaker, commodities should continue to go higher, and at some point the dollar is going to roll over. So what do you think about this one, Rick? Everybody loves talking about corn. Everybody loves it.
It's funny. I was obsessing over the close and soybean last week. I'm not even
Nice.
making that up. That looks pretty good.
Nice.
But yeah, corn's been leading in the ags, hasn't it?
Corn is leading the way by quite a bit. I mean, new 52-week highs. So, our signal is way back there. We got our first signal at a 50-day high because of the COT model. And then we got another signal. Our ad signal is at a 100-day high, and we've just been holding that position ever since. Now it's continuing to make new highs over and over again. Yes, it's definitely leading that sector. I'm just pointing to this because I think a lot of people aren't paying attention to it. This is up and over major moving average support. That's a 200-week, making it over the 52-week, making new 52-week highs. Like, this is just something that's continuing to develop. I will continue to post that chart and just keep you guys updated for the commodity report. And here's the next one, Rick. Copper to gold ratio. Now, this chart is basically showing the relationship between copper and gold. A lot of people think copper to gold ratio always rolls with the 10-year yield. This is a conversation I'm getting almost tired of having, Rick, which is the 10-year yield has to go with the
dollar.
because
I asked you, like, yo, what's going on? I mean, a while ago, I asked you, dude, when is this coming back? And COVID broke that. COVID broke that in a big way.
Yes. So COVID broke this, but also if you look back here as early as that inflationary environment that happened in 2003, we see that starts to disconnect. So every time we see major inflation, you see this disconnect between this ratio where they start moving in completely different directions. Even most of the time, even when it does separate a bit, it is moving in a very similar fashion. Now it's completely separated. It's detached from each other. That's because of inflation. But another thing I want people to see here is the fact that copper is probably going to follow gold at some point. And that's something that I think people really need to keep in mind, is that this ratio could catch up this way or catch down this way. There's two ways that this can go. I do think that the environment is saying inflation. I do think with the way gold looks, I mean, look at gold, it's just trending straight up. I think with the way this all looks, we're probably heading into more of an inflationary environment where I think yields coming all the way back down here, or we're getting to those, 5% zones, or sorry, I'm acting like it's the 70s, where we get back to these, like, 3% zones, 2% zones. I just don't see that happening anytime soon. So, Rick, we talked about this chart. I got super excited about it, working on some stuff, got some inspiration from a guy at Fidelity. Don't remember his exact name. I'd love to give him a shout out right now, but I tagged him on Twitter and I tagged him on the website as well. But this is basically showing these huge moves that happen in the commodity complex. And so when Rick and I are talking about things like silver making a big move, or sugar making a big move, or any of these things making big moves, it's mainly because we're talking about the commodity complex and how quickly things move in the commodity complex. So as you're seeing here, sugar makes this 515% move. Then it goes completely dead. If you look at a chart of silver, it's like funny to look at because it just looks terrible. And then it creates this secondary spike where it moves up 2,000%. It's crazy. Silver just after that makes a 1,000% move. Gold was moving hundreds of percent as well. Then we get back to 2020. We look at right before 2020. I think that was 2015 through 19, or maybe even to 20. Palladium made a 540% move. And then very quickly from 2020, April 2020, all the way till I think that was March 2022, oil makes a 1,000% move, 1,365% move. So basically what I'm saying here is, having systems and strategies that catch these major moves, they're really important.
And structurally, yeah, I was going to say, I mean, structurally, I mean, again, we don't really talk about fundamentals that much on this show. Maybe not as much as we should. Maybe when Kevin's on, you guys do. But,
we do.
But if we think about what drives commodity, ultimately, what drives price in every asset class is the same, right? It's supply and demand. What are the drivers in the commodity space? It's droughts, shortages, tariffs, wars, right? So you get these massive moves on the way up, but also on the way down, which is why, like, technical guys will tell you commodities tend to V-top, stocks tend to V-bottom. The Elliott wave guys will tell you commodities have extended 5 waves, 5th waves, equities have extended 3 waves, and so on. But ultimately, what it's all trying to get at is that these things move a lot, and they move very, very fast. And then when they stop, they also stop very fast. Right? When it rolls over, it's not a slight little topping process. Typically, right? It's just a nice little top.
Quick V.
Looks like looks like an A, right? A inverse V or whatever, V top. But yeah, having a system in place to catch these, because you're not going to be able to trade sugar like you trade Nvidia. You're not a long-term investor in sugar, right? It's not like, oh, I'm buying Palantir because I believe in the fundamentals. I want to hold this stock for the next 30 years. You can't buy sugar for the next 30 years. You have to have some sort of system in place to catch these big moves, because ultimately that's what's going to make your quarter. It's going to make your year. You catch one of these, it might make your decade. Honestly, that's one of the biggest things you've taught me. And sort of, I'm trying to shift away from equities and more so to this space, because you get a lot of these uncorrelated asset classes that you can trade. You can be in many markets really at the same time. Ultimately, it's an outliers game too, right? We're trying to hit those big home runs. That's what you're trying to say.
Yes, exactly. Yeah. So, if you're able to hit these big home runs just a couple times a year, people are looking at like, oh, the S&P 500 did 20%. It's like, So therefore I need to find things that move 20%. It's like, no, to outperform and have a portfolio of things that you're trading, you need the things that are going to make huge moves. And you only need one or two of these things. You don't need 50 to make your year. You need one or two. And so you get one or two of these big moves once in a while. We're only highlighting a few, like, because these are the ones over 500%. There's one like cocoa just moved 200% last year. Coffee
Yeah,
is making a huge move over
the
100%.
softs have been going crazy. I mean, orange juice, cocoa,
Orange juice made
coffee. I
over
mean,
100% move. Natural gas is like 80 something percent right now.
right.
So these things make huge moves, and you don't have to look for things that are like, hey, I'm just looking for something to outperform the S&P 500. You want these things to make big moves and only be a small part of your portfolio so you can diversify. And the more diversified you are, the better off you're going to hit some of these things. You're not going to hit all of these things, by just being like, there's no way to know, like, hey, I know sugar is going to go up 2000%. I'm going to go all in on sugar. That'd be cool. If I could do that, I would do that shit for sure. I just can't. And I don't know anybody who can or ever did. And because of that, I'd rather have small positions in a bunch of these things. A few of these are going to hit these crazy moves at certain times. And then the rest of them are going to hit normal moves, 20% or a small loser or a wash where it's just flat. That's fine. It keeps the portfolio good and connected. The answer to outperformance is catching some of these things. And you can do that by being in a lot of different sectors. That's not just commodities, it's also international, that's also bonds, using leverage, and so on. So in crypto. So here, coffee. We're going to end on coffee. And just wanted to talk to you guys about this one real quick because this is something that, a lot of people aren't paying attention to, but this is part of the reason why I like to trade futures, or just understand the commodity space. If you're getting hit in your pocketbook because of, you're drinking coffee, coffee's getting more expensive, whatever you're doing. What'd you say, Rick? Oh, your coffee's getting more expensive for you?
That's why I'm drinking tea today.
Yeah, see, it's getting up there. It's getting up there. But like egg prices and inflation, like if these things are kind of taking over your life and you're kind of feeling like overwhelmed by it, like on the other end of it, you can make some money. And this is one of the first things I ever learned in finance. And we used to sell people products based on this. This is stupid today, but it actually has some truth to it. If we were talking to like a person who had a transportation business, we would say, hey, you could invest in energy stocks, and therefore if you're losing money on gas prices moving higher, you're making money in your portfolio. And like we'd say things like that, and to me I'd be like, yeah, that sounds stupid, I don't know if I really want to tell people that. But then if you really think about it trading wise, it's like if you get a buy signal in something like coffee and you take it, and then you're making a 200% return in coffee, and then you're losing $5 a week on coffee and drinking coffee, you don't really care as much. So it's and once again, there's points in history where the stock market is very flat and you don't make a ton of money in the stock market, but then the commodity market is where the outperformance is. So, you want to be able to trade all these areas. I think this is the most important time for people to learn how to trade futures that I've ever seen while I've been trading, at least over the last 15 years. Basically since 2008, you haven't really needed to trade futures that much. But after that, now you do. Now it's something where you really have to understand how to trade futures. We're in an inflationary environment. This environment can last for many, many years. And you want to be in things like coffee when it's trending. You want to be in natural gas while it's trending. And if oil ever trends, you definitely want to be in that because you're losing money in gasoline every day.
It's a good philosophy.
Hey man, you got to save it where you can. And I like to me, I've always the thing that told me about the first guy who ever really taught me how to trade, who was great at it, would talk to me about like your goal is to protect your clients from inflation. Yeah, it sounds great, to outperform the S&P. You could tell people that it will get you more money from your clients.
What's your
But
Sharpe ratio, Jason?
yeah. What's your Sharpe ratio? Are you outperforming the S&P 500? All those things are great to tell clients. if you have great numbers against the S&P. But really, your goal for clients, whether it's IRAs, retirements, futures, trading, whatever the hell it is to outperform to outperform inflation, not the S&P 500. Outperform inflation. The way you do that is by buying some of these commodities, buying these things that have massive outperformance. Because yes, it sounds cool when the Fed says it's 2.3% or 3%, but really, if you just do your math on your groceries and your math on traveling and so on, you can see that inflation is a lot higher than that. And so, how do you outperform it? Well, you got to find some of these outlier trades in the commodities market, and that's what makes sense to me.
I brought over some charts. I don't know if we have time to share them.
Yeah, we'll go through it real fast.
So first one, go up to slide number 9. Yeah, so slide number 9. Yes.
Yeah.
Quickly, S&P 500 sector sorted by proximity to 52-week highs. Also stands out that only 6 out of 11 S&P 500 sectors are above their 21 days. So in the short term, yes, there is weakness in the market. But the strongest sector is staples, followed by comms, financials, utes. Right, but seeing staples there, maybe it's a function of the dollar, but it's also probably a function of defensive rotation. And next slide, a function of defensive rotation. We want to talk about risk on, risk off. This is the discretionary versus staples, which is a fantastic indicator, information ratio, if you want to look at. And on the left, I have cap weight, and on the right, I have equal weight. And actually, the equal weight had its worst day. So worst day for discretionary versus staples since the bottom of 22, which is noteworthy, let's just say. And also XLY, XLP on a cap weighted basis failed to break out above its prior cycle highs, which I was fully expecting it to be a very clean breakout, just like we saw in the equal weight, but alas, we did not. And that brings me to the next slide, and it's S&P 500. More sideways action, probably for the next few weeks to maybe couple months. Here's a few levels I've highlighted. You have resistance at 6,100. You have tactical support level, structural support level as well, and a VWAP anchored to the August lows. And that is a level that I'd be very, very I'd pay very close attention to that level, because all the dips at and around that level have been bought. So if we continue to chop and maybe you reach the lower end of that range, which brings you to the tactical support level, which also coincides with the VWAP anchored from the August lows, I think that's a level where the bulls are really going to step in. And I think that's it as far as like top down equities. And then I brought like a quick little crypto one for a trade. Rick's picks today is easy. Oh, it's not centered on the
I got it. One second.
Oh, there you go.
Let's see. I don't know why it wasn't centered when I hit slideshow.
Oh, I guess we were zoomed in, maybe. I don't know. The trade is, and this is, you're gonna have to bear with me. It's probably gonna have to be IBIT puts on IBIT. Why? Well, multiple reasons. Number one, it's going to be a hedge to my portfolio, which is heavily weighted on the speculative growth theme, right? So heavy on the ARKY stocks, Robinhood, Palantir, and it's been fantastic for me. Some of these trades I'm up 200-300% on, giving some back today, gave some back last week. But it could be a fantastic hedge for my portfolio, IBIT, because the speculative growth trade is heavily linked, because it's risk on to the just broad crypto writ large. And we see something like Solana that's been a leader this cycle. And I know there's no Solana futures at the CME quite. There's no SOL futures that I'm aware of at any reputable exchange, but maybe there will be one day if it survives this cycle. It's already breaking down, right? It couldn't hold the election anchored VWAP like Bitcoin does. And Bitcoin's at that. That's the breakdown level for me in Bitcoin. It's not a horizontal level at the lows from January. It is the election anchor VWAP. That is at least how I'm gonna trade it when I buy these IBIT puts. And again, this is not investment advice. I'm just telling you what I'm doing. And also, the behavioral research suggests, the literature suggests that markets do not top on bad news and don't bottom on good news, right? Because sentiment follows price, not the other way around. That's what technicians say, but the behavioralists say that, oh, this suggested this and so on. MicroStrategy and Coinbase especially, and Robinhood have had some of the best news regarding their business model, growth, etc., come out in the past like 2 weeks, I want to say. And yet we see these assets start to roll over, start to weaken, start to break down. That looks like a textbook top, maybe a local top. I don't know if it's a cycle top. I'd be surprised if the cycle's over without Solana breaking out in any meaningful way above the prior cycle highs. But again, it's just something I'm looking at, trying to protect my gains, trying to protect my portfolio, and also trying to take a little tactical trade. I don't know what you think, Jason.
No, I like it, but I got to get on to Gold Rush in a second, so I got to dip. But thanks for bringing some great picks, Rick. I think the trade actually looks pretty spot on. If you're looking at, anything based on any sort of indicator, this is probably actually going to follow through a little bit. I still like Bitcoin, so we'll see how it all works out. But I do think there is some opportunities for shorts
Primary
here.
Primary trend is still strong, and I'm still 100% long.
But short term makes sense. So, all right, guys, thanks for joining us. We'll see you guys next week at 11 a.m.
Peace.